build upon.
All right, so let's bring another voice into this, because 2 years after he first flagged inflation's big generational comeback, market forecaster Jim Bianco sees price relief ahead, but he warns that Wall Street may still see a world of hurt, a world of pain next year. So Jim joins us now. He runs Bianco Research. He's a guy that a lot of folks see and listen to on Wall Street. Jim, thanks very much for taking the time to join us here on Fast Money. So I wonder, maybe I'll just open-end question to you to start. This inflation narrative, is it over?
It depends on what you mean by over. Has inflation peaked? Yes, it's probably peaked at 9.1% in the spring, and it's coming down. Now, I know that's enough. Everybody's going to run and say that's it, bye. But the real question is not, is it coming down? Is how far down is it going to go? And I'm afraid that it might bottom out at around 4%. And the Fed has already said that they think neutral on interest rates is about 0.5% above the inflation rate. If it does, that means we've only just got back to neutral. And Jay Powell said that he wants to eventually get to restrictive. Now, if it goes all the way to 2%, then we are restrictive and there can be some kind of a pivot. So, yes, it's peaked, but that's not the real question. The real question is, how much further down does it have to go?
So Jim, with that in mind, then, if it's a matter of how high it stays relative to where it was, right, a year, 2, 3, 4 years ago, if it remains elevated at those levels, is there a way out? What needs to happen elsewhere in the economy to offset the effect of inflation staying at relatively high levels that we've seen over the course of the last, say, 5 years?
Well, what we're arguing here is that inflation, there's been some kind of a secular shift, that the era of 2% inflation is over. And I've termed it the era of cheap labor, cheap goods, and cheap energy is behind us. So we're going to have to restructure the economy in some way in order to return to, cheap labor, cheap goods, and cheap energy again. The restructuring the economy is more of a value cyclical kind of play, but it requires a lot of money and it requires a lot of time to do it. You don't restructure the economy in a short period of time. Look at the supply chain. We've been talking about the supply chain being fixed, and we're nearly 3 years after the pandemic hit, and it's still not all the way back. And that came back at lightning speed. So to restructure the economy is going to take even longer.
Jim, this is Courtney here, and just had a question for you, where it does sound like you see inflation coming down, which I think is a great sign, but you also noted that you see PPI coming in hotter than expected tomorrow. And I'm curious why you see that and kind of what you see the market reaction to that.
The market right now is fixated on gas prices. That's what it seems to be focused on in terms of how it forecasts PPI and CPI, and gas prices have come down. And the other thing to keep in mind, too, of the last 20 months in inflation numbers, only 4 of them has been below expectation. So even if you just did no analysis and just said it's going to be above expectations, you've been right 75% of the time for the last 2 years. So there is this structural bias in the market to look at the data and then shade it lower and hope lower, and then you add in falling gas prices. And that's why I think that there might be an upside beat for tomorrow. But, that's one number, and that's one guess on one number.
All right. Jim Bianco, thank you very much for the thoughts there, for the guy that originally kind of really called the kickoff to this inflation narrative. We appreciate it. We'll see you soon, Jim.
Thank you.
All right, guys, let's trade this here. If we take a look at this guy.